correct?
Yeah, yeah.
Yeah, just minimize it, right?
I think that's going live on other platforms. Where did you go?
Okay, just minimize it and go back to Zoom. Yeah, that's it.
Cool.
Cool. I'll see you after, yeah?
Should I move the camera to make it?
No, that's good. I think that's fine like that. Thank you.
All right.
All right. Thanks all.
Good.
What's up
Just
after?
leave this one here.
Yeah. Yeah. Do we have that recording in progress?
Yeah.
Sign somewhere?
Oh, yeah, yeah, yeah. Oh, where did it put it? Okay.
Not here. Check.
A marker.
I don't. Sorry.
I'll figure something. Right on this.
Ugh. Thank you. Morning, everyone. We'll just give it a few minutes for other people to join. We'll get started at sort of 2 or 3 minutes past. For those of you who are joining us on Zoom, if you look down the bottom of your screen, you'll see a Q&A button or icon. You can open that up and you can just add questions as we go. Get them in as you get the questions in as you think of them, and I'll answer them. I always try and answer them in sort of the relevant part of the presentation so that we're keeping it relevant. We'll just give it one more minute. The participant count is still going up, so we'll wait till that stops. For those of you just joining, just repeating what I was mentioning before, if you're on Zoom, you'll see a Q&A icon on your screen down the bottom. That opens up the box for you to type in questions. So please feel free to send in questions straight away or as we go, and I'll try and answer them in the relevant section. All right, one more minute. You don't need to raise your hand on the Zoom thing. You can just type your question straight into the Q&A icon. Sorry, into the Q&A box. All right, we've still got people joining, so I'll just wait another minute or so. Cool. Okay, let's get started. So, good morning, everyone. This is the latest now in our series of corporate tax webinars. For the first time in a long time, we actually have some really big updates from the FTA around free zones, especially. So for those of you that have joined before, welcome back. We'll have some new material for you. For those of you that are joining us for the first time, the way that we run these sessions, we'll go through all of the sort of practical steps around what you have to do, you know, who corporate tax impacts, you know, and the sort of basic compliance steps. Normally, we don't get too technical around the tax treatment, but today we will spend a little bit of time just around one of the items that was of particular interest in the latest free zone guide, specifically around trading businesses. So businesses buying goods, selling them on at a profit, which there was some interesting stuff there. So we've just had quite a few more people join us. So for those of you just joining now, if you're on Zoom, down at the bottom, the Q&A, you'll see a Q&A icon. Open that up and you can type in questions as we go. I can see some new questions are already coming in. I'll always try and answer these in the relevant part of the presentation. Most of the ones I've seen coming through already we will cover anyway, so that's fine. Okay. So I will share my screen. Give me 1 second. Oh, we've just had another 30 people come in. Sorry, I'll just repeat one more. Sorry for those that have been here from the start and have heard this for the 4th time. For those of you that are joining on Zoom, there's a Q&A button down the bottom. Please, you know, type in your questions in there and we'll answer them in the relevant part. You don't need to raise your hand or anything like that. You can just type the questions in and we'll answer them in the relevant part. All right, let's get into it. I will share my screen. So hang on a second. All right. So the parts we will cover today. As mentioning before, we'll go through the very sort of basic requirements, right? So who does it impact? When does it impact you? What do you need to do to comply? And then we will spend a little bit of time going through some specifics that have just come out in the free zone guide. Now, we've spoken to now into the thousands of businesses, and still there seems to be confusion around who corporate tax actually impacts, okay? And there's a very easy answer to this, okay? So the easy answer is that every single company falls under the scope of corporate tax, okay? So that's every single company here in the UAE falls under the scope of corporate tax. So it doesn't matter if you are in a free zone, it doesn't matter if you have no activity, it doesn't matter if you don't have a bank account. If you have an incorporated company here in the UAE, you need to go through all of the compliance steps for corporate tax. You might not have to actually pay any tax, but you have to be able to prove that to the FTA. And the way you do that is by going through and registering, filing a tax return, submitting all the information. Okay, so There are no, for a UAE company, there are no exemptions from registering. There are no, there are no thresholds that apply when it comes to registering and actually going through these steps. So some of the questions I can see already are, is it mandatory for a free zone company to register and file if there is no activity? Yes, absolutely. So you need to show the FTA that there hasn't been, the Federal Tax Authority, the FTA, you need to show them that you're not actually, you're not actually earning any profit. It's the complete opposite of VAT, for example. So we know that with VAT, you only have to register if you've hit a certain threshold or if you're doing certain activities, right? And you sort of opt into VAT. Corporate tax is the opposite. Okay, so everyone is by default, you are a tax-paying business, right? So you have to register, you have to file a tax return, and you need to prove to the FTA if you're not going to be paying tax. All right, so there are a couple of special rules, all right? And you'll notice that I use the word UAE companies when I was talking about who it applies to. Natural persons. So when I say natural persons, I mean if you are a sole trader or most commonly it's a freelancer license. Those entities, they only have to register for corporate tax if their revenue goes over 1 million dirhams. All right. So if you're on a freelancer license, you don't have a separate company. There's no separate entity. So you only need to, all of this applies to you only when your revenue hits 1 million dirhams. Offshore companies, we now have a bit more clarity around this. Okay, so if you're registered in RAC ICC, for example, you need to register by May 31st. If you have if your effective place of management, and sorry, we're going to get a little bit technical here, but remember this is only for offshore companies like those registered in RAC ICC. So if your place of effective management is in the UAE or you have a nexus to the UAE. So what does that mean? So if you have a RAC ICC company, right, and you're the shareholder and the director, and you live here in the UAE, it's almost, you can pretty much assume that you are managing that company from the UAE, so you fall under the scope of UAE corporate tax. Now, for offshore companies that fall into that, you need to register, by the end of this week, okay? We are recommending to all of our offshore clients that they register unless we have very good reasoning for them not to be registering. It's quite risky to just sit back and assume if you're an offshore company that you don't have to register, especially given that the fine for not registering is 10,000 dirhams. So if you have an offshore company, RAC ICC or an ADGM SPV or one of those ones, be absolutely certain that you don't have to register if you're not going to do it, and you need to know that, within the next couple of days. Okay, so aside from those special cases, the freelancers and the offshore companies, right? Remember, every single UAE company needs to register. Again, doesn't matter if you're in a free zone, it doesn't matter if you're just trading outside the UAE, doesn't matter if you've got no bank account, no revenue, no nothing. If you have a company, you need to go through this. All right, so we've established that it applies to all of you. Next question is, all right, when did it all start? So this is a question we get a lot, especially for companies that have never had to do financial reporting before. Generally speaking, all UAE free zones and the mainland follow a January to December financial year. What that means is that tax came into effect for you on the 1st of January 2024, right? So from the start of this year, you became a taxable business. Yes, corporate tax came into effect back in June last year, but it only comes into effect for your company for its financial year, which starts after that, which for the vast majority of you is 1st of January 2024. So it's only your financials from 1st of January this year onwards, so 2024, that come under the scope of corporate tax. There is one exception to this, which is DWTC. So if you're registered in Dubai World Trade Center, have a chat to us. There's a special thing you need to check to work out when you became taxable. We've got a sort of free consultation link on the end. It's worthwhile you just checking that, because the first real tax, the first actual tax year comes to an end at the end of this month. Some companies are quite unlucky in the timing of their financial years. So we do have some DWTC clients who are actually about to need to file their first tax return. A lot of them don't realize this, but that's just DWTC. Everyone else, your default financial year is January to December. So, you became taxable on the 1st of January. All right, so we've established who this applies to, which, will be the vast majority of you other than freelancers. We've established when your company became taxable. Okay. So what do you actually have to do? So yes, you absolutely have to register for corporate tax. We'll go through the fines in a second and the deadlines. You have to keep proper accounting records, and then you need to file a corporate tax return. Now, you need to file proper accounting records, and we'll go through what that means. Because you need to substantiate, or you need to demonstrate. Oops. Sorry, I just had a thing saying I've been signed out. One moment. Can people still hear me? Can someone just type in the Q&A box if I just had oh yeah, thank you. All right, I'm still going. Thanks. Sorry, I just had a weird error message. Okay, so you need to demonstrate to the Federal Tax Authority what your tax position is. Okay, so you need to file a tax return even if you have no activity, right? Because you need to show that you're not taxable. If you're under a threshold, you need to show that with your financial, with your financial reports, right? And they're quite strict around what accounting standards you use for those financial reporting. So we'll go through that. And then obviously, when it comes to filing your tax return, that's when you show that you are exempt, that you're under the threshold, or that you only have a small amount of tax to pay, hopefully none. Okay. So look, that's just sort of the basics around exactly what you have to do. Really, I always like to start this by sort of putting to bed any myths around who it applies to or not, because I know a lot of people still seem to think that, I'm in a free zone, so I don't have to do anything, or I don't have a bank account, so I don't have to do anything, or I don't have revenue, I don't have to do anything. None of that is true. You will get fined straight away, and you won't get some kind of warning. You'll just get hit with the 10,000 dirhams off the bat, and they're not going to accept ignorance as an excuse, unfortunately. So registration requirements. So a couple of months ago, the ministry released or the FTA released a new guideline around registration deadlines. So previously, the deadline for registration was September 2025. Okay. What the Federal Tax Authority realized was that people were leaving it late, and they were going to get a mad rush, towards the middle of 2025. So they brought all the deadlines forward to this year, and brought in a very large fine, 10,000 dirhams, if you miss your deadline. Okay. So the way you work out your registration deadline is you look at your license. Okay. You look at the date of issuance. Okay. So that could be last year, year before, years ago, 2010. You look at that date, and whatever month is shown on the date that your license was first issued, right? Then you look at this table, and this determines what your registration deadline is. So, for example, if you registered, or if your first license was issued in February 2018, okay, you ignore the year, right? Your month of issuance was a February, so therefore you have to be registered by the end of May. Same if you have a January license, right? Think of it as like the birthday of your business. So if you have a January, February business birthday, then your deadline is end of May. Now, it's pretty straightforward for everyone else, right? So if you got your, if your license was issued in August 2023, then you have to be registered by October 2024. If you got your license in May 2010, then your deadline is July 2024. All that matters is the month of registration. The only time you need to worry about the year is if you have only opened your business this year, right? Then you've got 3 months, sorry, and it's after March, right? Then you've got 3 months to register your company. Okay, so obviously, if you opened your business in December this year, then they're not going to expect you to be registered before the end of the month, because if you opened your business on December 31st, right, this year, then you can't get it in one day. So if you're opening your business this year, right, so easy way to think of it, right? If you opened your business in the first quarter of this year, then you need to go by the dates on here. If you opened it after that, then you've got 3 months. So again, that exception is only for people that open their business this year. Everyone else, if you opened your business last year or earlier, or January, February this year or earlier, you need to just look at that month and then look at the corresponding deadline. Okay, I'm just jumping through some questions here. So remember, the exceptions to this, to the registration, are offshore companies, okay, and obviously freelancers as well. So just to go back to those 2 exceptions. So a freelancer, you only have to register if your revenue goes over 1 million dirhams, and you just have to do that at the end of the year. Offshore companies, you need to get it in by the end of this month, okay? Unless you are absolutely certain that you don't have to register, which is a whole set of rules, you should be getting your registration in within the next, within this week. Otherwise, you'll likely get a 10,000 dirham fine. Okay, so I've got a question here. I've got an offshore trade license issued in July. What month is the deadline for corporate tax registration? So again, if you're an offshore company, you got to get your registration in this week. All right, I'm just going to do a quick scan through the questions, see if we've got here. A question here. My registration deadline is 31st of May. I submitted the registration, but it hasn't yet been approved. So the approval isn't important. You just have to make sure your application is in before your deadline. Okay, so as long as your application is in before the end of that month, then you don't get fined. The FTA will, understandably taking a little bit longer to get things approved right now. So don't worry if you're not approved by the deadline. You just need to make sure your application is in. The other questions we've got here, I think I'm going to be covering. Just give me one moment. I'm going to go through. Question here, is it mandatory for free zone company to register and file corporate tax if there is no activity in the UAE? Yes, absolutely. No exceptions. Every company in the UAE needs to register. A question here around registration. That one's fine. Again, if you've got it doesn't matter if you're in a free zone, you need to register. Okay. I'll probably repeat this one more at the end, but before you even ask if you need to register, if you've got a company, the answer is absolutely yes. Okay. All right. So on to accounting requirements. Let's go through this quickly. Look, the general rule is, you've got to do proper accounting. And what we mean by proper accounting, there is a financial standard or reporting standard that you need to use, International Financial Reporting Standards, or IFRS. Smaller companies can use cash basis accounting, but you still have to produce a proper profit and loss report and a balance sheet. Okay. Now, you can't just, submit some bank statements. You can't just, or a bank statement extract. You've got to actually do accounting properly. Now, this is a very reasonable request from the FTA, especially when we look at the exemptions that are available. Okay. All the FTA are asking in return for these exemptions is that the accounting is done correctly, so they can rely, they can actually rely on you that you do qualify for those exemptions, which is why there are substantial penalties here for not doing it. Okay, so if you haven't done proper accounting, you get a 10,000 dirham fine in the first instance, and then if you can't fix it, right, then that fine goes up to 20,000 dirhams. And that happens for each period that you haven't done the accounting as well. So if you got through, the 3 years of exemptions and then you got audited and it found out that you hadn't done any proper accounting, you'd be hit with, 60,000 dirhams in fines. Okay, so 2 things that you just have to be, very, very clear about what you have to do. Get your registration in on time and make sure you've got proper accounting in place. Okay, the rest of the fines are not huge, okay? And a lot of them accrue, so late filing and stuff. These are the parts that you just have to, you absolutely have to get right. So get your registration and get your accounting system up and running. It's just not worth, 70, 80,000 dirhams worth of fines just for not doing these basic steps. Okay, I'm going to sort of race through this part because I want to go, and there are a lot of questions here already about what's called high seas trading or dropship trading or the requirements around that. So I'm going to race through the exemptions and then we're going to spend a little bit of time talking about some specific pieces that were announced last week. So a free zone company needs to go through 4 layers before they actually have to pay tax. Okay, so if you are a free zone company, the first thing you look at is the location of your clients, okay? And if your clients are all, or customers, are all other free zone, UAE free zone companies, then there's a good chance that you'll qualify for an exemption, okay? If you have clients or customers that are inside the UAE or outside the UAE, right, then you don't meet this criteria, okay? So it has to be within the UAE free zone bubble. So we'll walk through an example as we go through this, all right? So let's say you are a marketing consultancy and you have 2 clients, but they're both over in Europe, okay? Your clients are not inside, or your customers are not inside the UAE free zone bubble, so you fail that first test. That's okay. Next thing you look at, you fall down to the next layer to look at an exemption, which is what you are looking at the activities of the business, okay? And this is where the ministry has released a list of what are called qualifying activities. And basically it says, it doesn't matter where your clients are. If you are doing one of these activities, then you are exempt from paying corporate tax. Now, most of these activities are around heavy industry, so things like trading in aircraft parts or shipping or manufacturing, okay? Generally speaking, services are not included in here, okay? So using our example of a marketing consultancy with clients overseas, they've failed the first criteria. Marketing consultancy is not a qualifying activity, so they fall through the second layer as well. So they wouldn't qualify for that free zone exemption. We'll go through those activities in more detail, especially the high seas trading part. But using the example of a marketing consultancy or a management consultancy, you wouldn't meet with clients overseas, you wouldn't meet the first criteria, you wouldn't meet the qualifying activities criteria. So the next thing you look at is the small business relief rule. Now, this is a very, let's say, friendly rule that has been introduced. So what this rule says, right, is if your revenue is less than 3 million dirhams, right, then you don't have to pay corporate tax. Okay, so your annual revenue less than 3 million dirhams, you get an exemption from paying corporate tax. Reminder, you still have to go through all the steps, okay? So you can't just sit back and do nothing. You need to file a tax return that shows that your revenue is less than 3 million, okay? You do that as long as your accounting's been done correctly, your revenue's been recorded correctly, then, you ask the FTA for an exemption when you file your tax return and they will say, yep, sure, no problem. Great. Small business relief, perfect. So let's say that you're a marketing consultancy with clients overseas, right? You don't meet the geography criteria, number one, because they're outside UAE free zones. Marketing consultancy is not a qualifying activity, so you don't meet that criteria. But let's say your revenue is 2.5 million dirhams a year. Great, you meet the small business relief criteria, so you don't have to pay any corporate tax. Now, let's say that using that same example, your revenue went over 3 million, okay? That would mean that you became a taxable business, all right? So let's say using that same example of marketing consultancy, but your revenue was 3.5 million dirhams, okay? Then you would become a taxable business and they stop looking at your clients and your profit. Sorry, they stop looking at your clients and your revenue and they start looking at your profit, okay? So that's, revenue or your sales less your expenses. If your profit is less than 375,000 dirhams, you don't pay tax. If your profit is over 375,000 dirhams, then you pay 9%, but only on the amounts that are over 375,000 dirhams. Now, a couple of things to clarify here. So it doesn't matter if you meet the small business relief rule, right? So your revenue is less than 3 million. It doesn't matter what your profit is. Your profit could be over that tax-free threshold and you still don't pay any tax, okay? So if you've got revenue of 2.5 million and profit of 2 million, it doesn't matter. They're not going to look at your profit because your revenue is under the small business relief threshold. It's only when your revenue goes over 3 million that they even start looking at your profit about tax, okay? And that small business relief, it's sort of a black and white threshold. So if you've got 2.99999 million dirhams of revenue, you don't pay any tax. As soon as you hit that 3 million, then your whole profit becomes taxable. Okay, so it's not a case of only looking at your revenue over 3 million. It's as soon as you hit 3 million, you've failed that test and your profit becomes taxable. All right, so we've sort of raced through that quite quickly and we're halfway through. I want to talk about the new things that were announced last week. So look, this is the full list of qualifying activities, okay? I don't want to go through all of them in detail because that would take all day. As you can see, a lot of it is based around heavy industry and sort of institutional finance. What I want to talk about is the information that was released last week. So we finally got some more detail around economic substance. Okay, so now I'm sort of skipping a chunk of technical stuff, right? Because the questions that are coming through here seem to be that people understand what is needed to get that free zone exemption. So just to clarify, if you meet one of those criteria, right? So let's start again. If you are doing a qualifying activity, right, then you can try and get the free zone exemption. All right. So let's say you are doing one of these activities. Let's say you're doing manufacturing in a free zone. Okay. You've met the qualifying activities test. There's a couple of other things you need to satisfy. One, you need to do audited accounts if you're a free zone company. The second part is you must show that you have got adequate substance in the free zone. Okay. Now, what that means is you need to show that you're actually running the business from the free zone itself. Okay. You can't just be, running it from overseas or running it in the mainland and just using the free zone as a vehicle to be exempt from tax. All right. So if you're doing manufacturing or logistics or one of those activities, you need to actually demonstrate that you are running the business from the free zone. Now, what does that actually mean? What it means is you need to show that you are doing what's called your core revenue generating activities. So the things that are actually, or the activities, the tasks that are actually generating the revenue of the business, those have to be done in the free zone. Okay. We already knew that this was the rule, but we didn't have any further guidance around what that actually looked like. What we now have from the guide last week are a couple of points. Okay. So there was a lot of talk in that guide around employees. Okay, so full-time employees. So what does this mean? If you are running a trading business, for example, okay, who is actually doing the contracts? Who is actually, bringing in the clients? Who is, arranging the shipping from A to B, right? Or agreeing the pricing between parties? All of those activities are the core income generating or the core revenue generating activities or tasks. Those need to be done within the free zone. So for example, you may need to have a properly qualified full-time employee working for that free zone company to show that you are actually running the business from the free zone. Okay. One of the key things here is that, if you have multiple different revenue streams, you need to show substance for all of those revenue streams, okay, coming through. For a lot of you, what this means is you will need to hire someone in your business, especially those of you in, where this is going to become very relevant is for designated zone companies, which we'll get to in a second, who are running, high seas trading or dropship companies, right? You need to be able to show that the employee in the business is doing this, employed by the free zone company, doing this in the free zone. Now, it may be that as the owner, you're the only employee and you're the full-time employee. Still, you need to make sure that you are actually an employee of the company and not just an investor or, something like that. You need to actually show that you're an employee. You need to be doing this from the free zone. Now, there are obviously other parts around this, like operating expenditures and, a few other things. But the main part, again, that this guide really stresses is around employees. It's a little bit different for those of you that have ever done economic substance at the state level, all right? So if you've done it for the UAE, ESR stuff. It is quite different, right? Because ESR only looks at certain activities or high risk activities. For the tax, what we've now established is that the corporate tax substance regulations are quite different. They're a bit more specific around employees, and you have to do it if you want that free zone exemption. So just to kind of come back to a sort of high level view, right? If you want to get this free zone tax exemption, you need to be doing either a qualifying activity or 95% of your revenue needs to go to UAE companies. Sorry, you need to have 95% of your revenue from UAE free zone companies or a qualifying activity. You need to show adequate substance in the free zone, and you'll also need to do an audit before you file your tax return. Okay, I'm getting some specific questions around activity. So I'm just going to have a race through the questions. So please bear with me for a second. High sea sales in a free zone. We'll go through that in a moment. A question around registration. E-trader license. If there's no separate company, you only have to register if your revenue gets over 1 million dirhams. Liquidations will cover. Audit. So there are under the tax laws, there are two groups that need to get audited, or two criteria. One, you need to get an audit if your revenue is more than 50 million dirhams a year. Okay, then you have to get an audit. Or two, if you are going for a free zone exemption, then you need to get an audit as well. Okay. Sorry, running through a lot of them we've covered. Okay, a question here. My company is in a free zone. My clients are 95% in a free zone, as long as that's by revenue. Okay, so I'm a consultancy company with physical office and employees in the free zone. Will I qualify for a free zone exemption? Yeah, so if 95% of your revenue is coming from within UAE free zones, right? Then that's the criteria 1 that we talked about before. So you don't need to worry about activities, okay? You need to worry about, are your clients UAE free zone companies? Is more than 95% of your revenue coming from those, right? And do you have adequate substance? Yes, then you should qualify. You also need to do an audit as well. Sorry, quickly scanning through. If you're the owner of the business and the only one running the business, yep. So you need to make sure that you're listed as an employee to demonstrate substance in the free zone. Okay, a question here. I'm a free zone company, a marketing agency. One of my clients is a free zone company and the other one is located in Europe. Okay, so if you need to have 95% of your revenue coming from the free zone company, okay? So you can't split it out, right? It's basically black or white. It's called de minimis, right? If your free zone company, if the free zone client makes up 95% or more of your revenue, great, you'll qualify. If the European company makes up 5% or more of your revenue, then you miss out completely. You can still look at small business relief if your revenue is less than 3 million, but you don't get you wouldn't get the free zone exemption. Educational language business, that's unlikely to meet the criteria. Question here, are JAFSA and DMCC exempt from corporate tax? Absolutely not. As you know, we've mentioned a few times, it doesn't matter what free zone you're in or anything, you need to go through the steps, okay? All right, a lot of questions here around high seas trading or dropship. Let's get into that. Okay. All right, so one of the qualifying activities is called distribution of goods or materials in or from a designated zone. So this is the third one from the bottom. Distribution of goods or materials in or from a designated zone to a customer that resells such goods or materials. What does that mean? So the first thing to note is that this applies to designated zone companies only, okay? Designated zones are essentially a subset of free zones, okay? So a standard free zone would be something like Dubai World Trade Center, DMCC, DIFC, all right? Whereas a designated zone is something that it's sort of a bonded zone. Normally it's the ports. So you've got Dubai Airport free zone, you've got Jebel Ali free zone, you've got certain areas of the RAC of the RACs up in Ras Al Khaimah. Certain areas of that free zone are actually designated zones as well. You know, they're the ones that are normally behind a fence. You know, it's a bonded area for VAT. Basically, it's deemed to have goods are not deemed to have entered the UAE if they are still within a designated zone. There is a list of designated zones in the UAE. But the main thing to remember here is that there is a big difference between treatment of a designated zone company versus a free zone company. Okay. So the guide last week clarified a few things which are hugely helpful. So if you are a designated zone company, okay, you can buy from country A, ship to country B, you know, sell to country B. The goods never touch the UAE, and that will be exempt from corporate tax. Okay, the profits on that. A couple of things that you need to remember throughout all of this. Point one is that you have to take title to the goods, okay? So you can't just be an agent arranging the shipping, you know, arranging the purchase. You need to buy the goods from, you know, from the supplier and then sell the goods to the client, to the customer, okay? Point two is that the customer has to be a retailer or distributor, you know, it can't be the end user. So you can't be selling goods to obviously individuals who are not going to on-sell that. You can't be selling to, you know, if you're selling furniture, for example, right? If you're selling that to a furniture retailer, great, you know, that would qualify. However, if you're selling it to a company that is going to use that furniture in their offices, that doesn't qualify because that's the end user. They are not going to own sell that furniture. All right, so those are the 2 points that you need to remember throughout the next few slides. Okay, so the first scenario where this is exempt is high seas trading, right? Or third port trading. So buy from country A, sell to country B, never enters the UAE. As long as you're a designated zone company, then that will be exempt under corporate tax or an exempt activity. Services do not qualify for this unless they are, part of your actual trading, your actual trading activity. All right. This is where it got interesting. Okay, so what the FTA has now specified are some additional circumstances where this activity would be exempt. So let's say you buy from country A, you get it delivered into your designated zone company, right? And then you import it into the UAE, you sell it to a retailer or distributor inside the UAE. That will also be exempt. Okay. The next scenario, if you buy from a UAE manufacturer or even someone who's imported it into the UAE mainland, you buy the goods from within the UAE into your designated zone and then sell it to a retailer or distributor outside the country, that will also be exempt. You don't actually even need the goods to pass through your designated zone. You can just buy from a UAE supplier, sell it to a offshore client, as long as that client's a retailer or a distributor, and that will be exempt from corporate tax. And the next one was the most interesting one. Okay, so what this says is that if you are a designated zone company, you can buy goods from a supplier in the UAE, sell them to a client or a customer still inside the UAE, and that will be exempt from corporate tax. The goods do not need to go through the designated zone. So you can just be operating out of the designated, operating from the designated zone, buying and selling goods inside the UAE, and those will be exempt. Okay. This is why I believe the FTA is going to be very strict around demonstrating substance in the designated zone. Okay. Otherwise, every single, person that is trading goods or buying and selling goods is going to be trying to, just put a sort of shell company in the designated zone. So again, if you are a free zone company that is not a designated zone company, there could be a huge benefit in you, moving to a free zone or establishing yourself in a designated zone. Now, there are certain rules around that. But it's very clear that, when I say certain rules around that, there are certain rules around the ability to do that. There are anti-abuse laws and the tax laws. But it's very deliberate here from the rules that we've seen that designated zone companies will be, effectively tax-free for trading. And that's going to be outside the UAE, right? It's going to be via a designated zone company with companies inside the UAE, and it's even going to be fully inside the UAE as long as you're that designated zone company. Okay, I'm getting a few questions just to sort of go over these last few slides again. There have been a lot of questions about this specifically already, so I might just quickly run through it again one more time. Okay. So, a designated zone company. Reminder, designated zones are different to free zones, all right? They are still free zones. They are a subset of free zones, but not every free zone is a designated zone. Designated zones are normally the ones out by the ports. So Jebel Ali free zone, Dubai Airport free zone, and there are office spaces up in Raqiz, for example, in Ras Al Khaimah, for example, that are designated zone. I think there's designated zone areas in Al Quwain. Standard free zones, which are not designated zones, for example, DIFC, DMCC, Those are not designated zones, so this doesn't apply. Okay, it's only designated zones that this applies to. Okay. Now, what you can do if you are a designated zone company, effectively you can trade either outside the UAE, inside the UAE, inside UAE free zones, and you can be exempt from tax, provided that you take the title to the goods. So you're not just acting as agent, you're buying and actually, you're buying and selling the goods for a profit. And you are selling to a further retailer or distributor. So you can't be selling to an end user, an end client. So the circumstances where these are exempt, basically the guide has said all circumstances are exempt for this, right? So let's just run through them quickly. So if you're buying goods from a supplier in country A, selling them to a distributor in country B, right? That will be exempt. The goods do not have to pass through the designated zone. It's fine if they do, but they don't have to. You can buy from a supplier in country A, import the goods into your designated zone company, and then import them into the UAE. Sorry, sell them into the UAE. As long as that customer is a retailer or distributor, again, then that will be exempt activity. You can buy goods from a UAE supplier, sell them to a customer. Sorry, I'm looking at the bottom box here. You can buy goods from a UAE supplier, sell them to a customer in another country, right? As long as that customer is a retailer or distributor, that will be exempt, and the goods do not have to go through the designated zone. So that supplier, as long as you actually take title to the goods, you buy them from the supplier and ship them directly to the customer. As long as that customer is a retailer or distributor, then that will be exempt. And then this is the most interesting one. If you're a designated zone company, you can buy goods from a UAE supplier, sell them to a UAE retailer or distributor, and that will be exempt from corporate tax, right? Which is really significant. Again, this is sort of criteria one, right? This is meeting the qualifying income criteria. The other, you also obviously have to, demonstrate economic substance in the free zone, and you also have to do an audit. Okay, we're going to move on from that. I think we spent a good sort of 15 minutes on that. Hopefully it's very clear. Again, I'm getting some very specific questions now around, individuals' specific situations or circumstances. We've got I'll have a QR code on the end of this where you can register for a free consultation, and we can jump on and go through it in detail. So one other thing, there was a lot in the guide. We don't have time to go through all of them, but one other piece that I've found relevant for a lot of my clients is around commodities trading. Oops, sorry. Now, what had been indicated in the law is that commodities had to be traded on a recognized exchange, commodities exchange. The guide last week has clarified that. So you don't actually have to transact on a recognized exchange. Okay, so you can just be buying and selling commodities outside of an exchange, and that could still qualify as a qualifying activity, as long as the goods themselves are same or the same standard as those which are traded on the recognized exchange. All right, so for example, gold exchange, recognized exchange needs to be 99.4% pure. If you are buying and selling gold of that purity, right, then you can still qualify for this activity without having to do the transaction on that recognized exchange. Okay. I'll just touch on one other question, which we always cover. So a lot of people ask, can I just pay myself a big salary? All right. I know I'm jumping around here. We're just going to move off free zones. I think we've covered a few technical things. So let's go back to some of the more basic questions. So a reminder, if your revenue goes over 3 million dirhams, right, and you become a taxable business, you are looking at what expenses can be deducted. One of the main expenses that will be deducted for a lot of clients that we deal with is the owners paying themselves a salary. Now, there's a couple of things you need to sort of satisfy here. One is that you actually need to be an employee of your business. So if you look at your Emirates ID, it says that you are an investor, for example. You don't actually work for your company. You are the owner of your company. And so, you can't be an employee. So you need to transition your visa or your agreement so that you actually are a employee of the company and you can register an employment contract, with your free zone or with the ministry. And at that point, once you've got the sort of compliance side sorted out, then you can pay yourself a salary. Now, how much can you pay yourself? That is a very, sensitive question, I think I'd say. So there are very clear rules around transactions with what are called connected persons. Okay, so if you are the owner of your company, you are what's called a connected person. Okay, so that transaction has to be market value or arm's length. What that means is that if you're an owner of a company and you're an employee of your own company, you can't just pull out a huge salary that's way out of market what you'd be getting on the market. So the sort of default way to think about it is, okay, if you went and did that same role for another company, an unrelated company, what kind of salary would you be drawing down there? Okay, so if you're the CEO of a, if you're doing a marketing consultancy, for example, and you're the sole employee, what kind of revenue, what kind of salary would you be earning as a partner in an ad agency or marketing consultancy, and what would they be earning? That's the sort of way to look at it. What would a comparable market value be? All right. Now, questions here. If your visa, so for example, if you are a golden visa holder, right, that's fine. You just need to still have an employment contract. So there's maybe I've confused people by using the term visa. So you need to be able to have an employment contract with your company. Okay, if you are on a golden visa or a separate visa, then that's fine. You can still have an employment contract with the company. Okay. But if you are listed as an investor in that company and that's how you got your visa, that's where you need to transition it to an employee visa of that company. All right. Another point I just want to quickly cover is around business closure, and a couple of people have asked around this. So we touched on the start around the taxable period. All right. So pretty much 99% of companies became taxable from the 1st of January 2024. If you've closed your business after that period, so after that date, after the 1st of January, then you still need to file a tax return, okay? Because you need to prove to the FTA that you haven't made a profit since you became a taxable business. All right, so how do you file a tax return? You need to go and register for corporate tax, all right, so that you've got the portal there. You file your tax return, you pay any tax that there's owing, and then you can deregister, okay? There is a lot of, I guess, misinformation out there, and people were sort of, I guess, thrown by the new registration deadline. So there seems to be a misconception that if you close your business before your registration deadline, then you don't have to do anything, but that's not the case at all, okay? The obligation is to file a tax return if you crossed into your taxable year, which, if you have shut down your business this year, then you would have crossed into your taxable year. So you've got an obligation to file a tax return. The mechanics or the administrative steps on how you file that tax return is you go and register, you file, you pay your tax, and you deregister. Now, a lot of you, if you've closed your business this year, maybe it was inactive, that's fine. You still need to just go through these steps, file a nil return, and then get your tax clearance from the FTA. We've already been doing this for a lot of clients. We even had to file a tax return for someone that closed their business, I think it was the 7th of January. So we had to file a tax return for 1 week. But, this is the way that the rest of the world works. I've spoken to the ministry and to the FTA, in person on this. We have absolute confirmation that this is required. So, and again, the fines for not doing this, you're talking about 10,000 for missing registration, then you're going to not be keeping accounting records, and then you've got to miss your filing deadline. So please, if you are closing down your business for, you're restructuring or you're liquidating to move somewhere else, you need to get a tax clearance the same way that it works everywhere else in the world. Okay, you can't just close your business now and sort of walk away. You've got to get through these steps. You won't actually see the tax return filing if at this stage. The only way you actually see the tax return filing is, or the only way that opens up is once you've done your registration and your deregistration application. It's a bit of a lengthy process, but it has to be done. Okay, so a final recap. All right, I know we've jumped around a lot. Normally we don't go that technical on the free zone stuff, but we had those updates, so we thought it would be worthwhile. So if you are a free zone business and you want to go for the exemption under the free zone rules, obviously, yes, you need to register, you need to do your proper accounting, you need to do an audit, you need to maintain your economic substance. All right, so that means having a full-time employee or employees, depending on their level of activities, and then you need to file your tax return. Small business relief, you still have to register. So if your revenue is less than 3 million, you still have to register, you still have to do your accounting to prove that your revenue is under 3 million, and then you file your tax return. That's where you show the FTA that your revenue is less than 3 million. If your revenue is over 3 million, you need to register, you need to do your accounting, you file a tax return, which will show how much tax you owe. Now, you don't need to do an audit for a taxable business unless your revenue is more than 50 million dirhams. Okay. I think I'm just going to do one more scan here of the questions. I think we've covered most of these. A lot of people are asking very specific questions. I'm an investor visa. I'm an investor visa owner of 100% shares of the free zone company. If you are an investor visa, I wouldn't risk trying to take out a salary, right? Because you don't have an employment contract. If you're an investor in a company, any distribution that you take or any money that you pull out of the company can be deemed as a dividend, right? And that's not tax deductible. So I'd recommend that you move to an employee visa of, under your own company and register an employment contract to ensure that your salary is deductible. Okay. A lot of questions here are getting very specific around what we've discussed. If you have any questions, getting to that level of detail, please, there's a QR code on the screen now. Jump in, you can scan that, you can book a free consultation. It's just a 15-minute one, but at least that way we can go to those specific questions and sort of get moving on those. For a lot of people, for the vast majority of you, you're already well into your tax year. So you need to make sure that your accounting is up and running. The later you leave it, the harder it is to go back and do it retrospectively, especially if you need invoices to show that you are meeting free zone exemptions or small business relief. So please, if you haven't got your accounting together, absolutely get onto it. That is the most important part. Don't miss your registration deadline. There's not going to be any relief around that fine. So any other questions, please jump on for a free consultation. We also have very, very, very price effective packages for corporate tax, for accounting. We have heavily discounted packages for inactive businesses. So if you don't have any revenue, let's say you've just got your business right now for a visa purpose, you still have to go through that, but we have heavily discounted packages for that. So thank you all. Sorry that we sort of raced through a lot of that, but I did want to cover off some of that free zone stuff, which is always gets bogged down in a bit of detail. But hopefully that was clear for everything else. We'll host another webinar probably next month or sooner if we get any other big updates. And we will speak to you then. Thanks a lot.